Hey everyone, welcome back to Grow Wealth Daily, the channel where we turn personal finance from boring to ballin'. If you've been wondering how to start investing or grow your money this year, you're in the right place. Today, I'm breaking down how beginners can grow their money in 2025, even if you're starting with as little as $100. No jargon, no pressure, just real talk, smart strategies, and a little bit of humor to keep it spicy. Let's dive in. Alright guys, let's be real for a second. You work hard for your money, right? So why are you letting it just sit there in your savings account, collecting dust bunnies and a pathetic interest rate that wouldn't even buy you a decent cup of coffee? Seriously, if your money's just chilling in savings, it's basically losing value every single day thanks to inflation. It's like trying to run on a treadmill. You're putting in the effort, but going nowhere. Investing, on the other hand, that's where the real magic happens. We're talking about putting your money to work for you, like hiring a whole team of tiny money-making ninjas. Historically, the stock market has returned an average of 7 to 10% per year after inflation. Now, I know what you're thinking. Graham, the market is volatile, it's risky. And yeah, you're right, there are ups and downs. But over the long term, the stock market trends upwards. It's like climbing a mountain. There might be some rough patches and steep inclines, but eventually, you reach the summit and enjoy the view. But here's the real kicker: compound interest. This is where things get really exciting. Compound interest is like the snowball effect of investing. Your money makes money, and then that money makes more money, and before you know it, you've got yourself a full-blown avalanche of wealth. Okay, so you're ready to start investing? Awesome. Let's break it down into some easy-to-follow steps. Think of it like assembling IKEA furniture. Except instead of ending up with a wonky bookshelf, you're building a solid financial future. Step 1. Open a tax-advantaged account. First things first, you need the right account to house your investments. In Canada, we've got some sweet tax-advantaged accounts like the TFSA, FHSA, and RRSP. These bad boys are designed to help your money grow tax-free or tax-deferred, which means more money in your pocket and less going to the tax man. It's a win-win. Step 2. Choose a platform. Next up, you need to choose a platform to invest on. Think of it like picking your weapon of choice in a financial video game. You want something user-friendly, reliable, and ideally with low fees. Personally, I recommend beginner-friendly platforms like Wealthsimple or Questrad. They make investing as easy as ordering takeout, and speaking of which, they also have some pretty sweet referral bonuses. Just saying. Step 3. Pick your investments. Now comes the fun part, choosing what to invest in. But don't worry, you don't need to be the next Warren Buffett to make smart choices. If you're just starting out, I always recommend keeping it simple with ETFs or exchange-traded funds. Think of ETFs like baskets of stocks. They allow you to diversify your investments across different companies and sectors, which helps to reduce risk. Alright, so you've got your tax-advantaged account, you've chosen your platform, now it's time to talk about what to actually invest in. Remember, we're going for beginner-friendly options here. Investments that are about as exciting as watching paint dry, but just as reliable. First up, we've got index funds and ETFs. These are like the all-star players of the investing world. Consistent, reliable, and always putting up solid numbers. Think of them as the Tom Brady or Serena Williams of your portfolio. Some popular options include $VFV, which tracks the S&P 500, basically the 500 biggest companies in the US, or $XEQT, which gives you all-in-one global exposure. Next, we've got dividend stocks. These are like the gift that keeps on giving. Dividend stocks are companies that pay you a portion of their profits just for holding their stock. It's like getting paid to sit on your couch. Except instead of Netflix, you're watching your money grow. Some solid dividend-paying companies in Canada include banks, utilities, and telecoms. And finally, we've got REITs, or real estate investment trusts. Okay, so we've covered the basics of investing, but let's talk about what's going on in the world right now, because let's be real, 2025 has been a wild ride so far. It's like trying to navigate a roller coaster blindfolded while someone throws popcorn at your face. First off, interest rates are still up. The Bank of Canada has been trying to tame inflation like a lion tamer, trying to wrangle a particularly grumpy house cat. It's been interesting to say the least. On the plus side, higher interest rates mean you can actually earn a semi-decent return on your savings accounts, finally. But on the flip side, it also means borrowing money is more expensive, which can put a damper on things like buying a house or starting a business. Speaking of inflation, it seems like the price of everything from groceries to gas to avocado toast has been on a steady incline towards the moon. Seriously, at this rate, I'm going to have to start selling my bathwater just to afford rent. But hey, at least we're not in the 70s, right? And then there's the stock market. Ah yes, the stock market. 1 minute it's up 2%, everyone's popping champagne and planning their early retirement. The next minute, BAM! It's down 5%, everyone's panicking and hoarding ramen noodles. It's enough to give you whiplash. Oh, and don't even get me started on the whole tariff drama that just dropped. It's like watching a reality TV show, except the stakes are way higher and nobody knows what's going to happen next. But here's the thing, and this is important, don't panic. I know it's easier said than done, especially when you see your portfolio doing the Macarena with your hard-earned money. But remember, investing is a long game. The market will always have its ups and downs, its bull markets and its bear markets. Alright, before I let you go, I want to leave you with some pro tips to help you navigate the exciting world of investing. Think of these as your cheat codes to financial success, except they're totally legal and won't get you banned from the stock market. First and foremost, invest consistently. I know it might be tempting to wait until you have a big chunk of change to invest, but the truth is, even small amounts invested regularly can add up big time over the long run. Remember that whole compound interest thing we talked about? Yeah, that's your secret weapon. Even $50 or $100 a month can make a huge difference over time. Speaking of consistency, one of the easiest ways to stay on track is to set up auto investing. This is where you automate your investments so you don't even have to think about it. It's like having a personal finance assistant who takes care of your investments for you, except without the awkward small talk and the need to provide snacks. Remember, investing is a marathon, not a sprint. Don't get caught up in short-term market noise or try to time the market. Instead, focus on the long game. We're talking 3, 5, 10 plus years down the road. The longer you stay invested, the more time your money has to grow and compound. If you're investing in dividend-paying stocks, don't forget to reinvest those dividends. There you have it, folks, your crash course in investing for beginners. Remember, you don't need to be rich to start investing, but you do need to start investing to grow rich. If you learned something today, smash that like button, subscribe for more weekly money moves, and share this with someone who keeps saying, "I'll invest later." Check the links below for my free beginner investing guide and tools to help you get started. Catch you next time on Grow Wealth Daily. Peace.